Hi, I'm Joe Davis. In this video, we'll touch three things. One, the Fed's recent interest rate cut, what that means potentially for the markets in the near term. Secondly, the lack of government data, jobs, inflation, how did that influence policymaking? And third, perhaps most importantly, let's look ahead into 2026. Where are the risks to the economy and the markets, and where are the opportunities? Well, the Fed's recent decision to cut interest rates, I characterize it as, it's not a big surprise. I think you could characterize them as modestly hawkish, meaning they may anticipate perhaps one, perhaps even at most two easings into 2026. I think the big headline is we're seeing increased debate at the Federal Reserve, and dissent in terms of like what the next action is, how much additional easing, which I think is natural. I think that the Federal Reserve's decision, as well as the debate at the Fed, is a healthy one, and they're seeing what I think we all see, which is a labor market that has slowed down, yet we still have inflation that is somewhat stubborn. And so I think the decision was a wise one. I don't think I'll have material market reaction in the near term, in large part because I think today, the recent action was expected. So again, generally it's not going to be, really big news for the rest of 2025. I think the big question is, how many easings in 2026, and how does that relate with their growth forecast? Well, I think the lack of official data, which is clearly unusual, has admittedly had some bearing in terms of the conviction, I think, just in terms of some decisions. But I think nevertheless, even if we had the data in front of us today, we probably would have seen the same reaction and decision from the Federal Reserve. You can look at a number of data points, not just official economic data, that point to some of the same conclusion, and that is the labor market has weakened over the course of 2025. Not all that is because businesses see weaker demand. I think that's an important point, and that gives rise to why the debate is, because some also are pointing to inflation, which has been stubborn. And so I think when you do look at the balance of risk in a period of a lack of official data, I think you would still come to the same conclusion that the Federal Reserve is acting appropriately from a risk management perspective. The narrative going forward is going to change, and that's going to change both in terms of the data. Do we see a stabilization in the labor market, which would say the Federal Reserve doesn't have much more easing left, and balancing that with the stubborn inflation? I think that is clearly the theme for 2026 and will have the most bearing on the financial markets. Well, the factor that will clearly be most prominent in 2026 is what we refer to as AI exuberance. There's a lot to be excited about. We see some upside risks manifesting for the U.S. economy, growth in part because of the AI investment, which will likely remain considerable. That will have an implication then for the stabilization of the labor market. We're starting to see the Federal Reserve talk about that very scenario in their recent decision, acknowledging the prospect for marginally higher growth. We also have to look at the risks also emerging in the financial markets. Our theme this year is AI exuberance, economic upside, stock market downside. We don't intend to be bearish, but the markets are fairly euphoric on the AI payoff. And so we expect elevated volatility, particularly in some of the technology parts of the market. We remain much more constructive on other parts of the equity markets, whether it's small cap or value-based companies. Please, we refer to our report, which goes in much greater detail. And of course, fixed income, which should provide robust carry. And if there's the risk in the market, it would be perhaps a pullback and some of the euphoria in the equity market that would generally seem to be bond market supportive, particularly on conservative portfolios, in an environment where in the equity market, we're entering the euphoric phase. Be sure to like this video and to subscribe to hear from Vanguard's thought leaders.